The only ones that seem to have some problems are the ones that just need to figure out to stop trading for long periods of time. Think about trading is if you think about mental capital, think of this way: you wake up and you have 1,000 in mental capital. Think of it as a currency. You wake up, you have your coffee, you're on your way to work. You get to work early, you decide you want to trade. And now you have 950 in mental capital because driving to work can be a pain in the ass sometimes, but it wasn't really that stressful. It just wore on your mental capacity just a little bit. You haven't really had a chance to relax or meditate or anything. Now you get in front of the charts, you start trading. I would say every 15 minutes is gonna cost you 225 of the 1K you started with. 15 minutes is gonna equal 200 of your mental capital. I guess the best way to look at it instead of capital, look at it as a battery level. When you wake up, you're at full charge at 1K megahertz. And then after you get to work, you're at 950. Once you start trading, your brain kicks into high gear. You are under stress. Your brain is processing stuff at a high rate. It's like when your phone starts getting hot when you're surfing the web or on an app. That's what trading is. It's going to cost you 225 of your mental capital every 15 minutes. Let's say in this example, you get to work at this time, just ignore the time, and price comes down. And now what time is it when you start trading? It's 11:39. Let's say you're on your lunch break. You have an hour lunch break, 11, 12. Price goes right through the gap that you've been told it usually will offer you support because it's a new week opening gap or new day opening gap. You take a stop out. You've used 6 minus 950. Now you only have 303 left of remaining brain power to be able to trade at a high level. Yes, you can trade all day, but are you going to be able to trade at a high level? You know how when your battery gets low, it starts to get glitchy and doesn't really work right, even though you still have 20% left? That's what is going to happen here. You've been trading for 45 minutes. That's when I stopped trading. And let's say you see a fair value gap here. You're like, oh, cool, I'm going to go short here, ignoring some of the clues here. What are the clues? You have 1 push, 2 push, and then 3 pushes down. What you haven't had a afternoon rally at all yet. Price has just been moving down in a straight line all day. We're coming into the end of the day. What's the daily candle look like? Wow, it's just a straight red bar, ignoring the fact that at the end of the day, distribution phase starts. So you should be hesitant when taking shorts. Let's go forward. Let's say you went short in that fair value gap. You're mentally tired, so you didn't scale out like you normally would. You take a fat stop. Now you're pissed off. Now you're starting to feel the stress. When stress is kicking in, you can think of your mental capital being used at 2 times. So you had 303, you took a stop out, you're feeling stressed. Now you only have 3 left. And you see the intermediate term high being broken here, but you're pretty sure that it's still going down. And why are you pretty sure? Because you're in tilt. You're not thinking clearly. This used to happen to me all the time. I would ignore this amazing strategy and I would go short right here, being thinking, well, it's not going up, but in fact, it is going up. So then let's say you go short in this fair value gap because you believe it's going down. Then you're stopped out again. And now you're just going to go fucking ham and YOLO the account. Now you go long and now you go short again, take another loss. You're like, this fair value gap has to work. It's coming back to the mitigation block. It's a good setup, but your brain's not working at full capacity. You don't scale out and you're looking for this low here. You're being greedy. You get stopped out again and now your account's blown. That is what I'm talking about.